Ladies and gentlemen of the crypto space, we're live on a Monday at 11:29 a.m., January 4th. It is the new year. I haven't seen you guys since basically Christmas break, pre-New Year holiday craziness, and we're off to one heck of a start. There's so much going on. I would typically say, where do we begin? But we basically have a good picture of what's going on. It's just very consistent with the macro narrative we've been discussing for a fair amount of time at this point, and it's just like all things are converging. It's just incredible. So we're going to get into details. We're going to be looking at the charts, and you're going to see how the puzzle pieces fit together on this crazy, crazy day. The Bitcoin 20% dip, dollar down, commodities up, risk off, exit fiat, equities. Mm-mm-mm. But bear in mind, it is a bit of what equities because there's some serious movement going on in the equities that matter. We will discuss. Today's episode, along with all episodes, sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges. Not your keys, not your crypto. Non-custodial, DeFi, or nothing at all. Man, I got to pull back on that a little bit. 173 for gas right now? Who's paying it? I'm not dropping $100 on a transaction. I've literally been priced out of like a lot of things. Just not dropping it. But you don't need to. You don't need to. Got a couple of things up to consider. Let's get to the tabs and get this party started. Who's in the stream? Frank's in the house. Captain Weber, always a pleasure. Stream is back, baby. I leave the stream to do a couple of things, the finishing charts, and come back to a market explosion. It is. We're going to get into it. My man, good to see you. Barry, always a pleasure. Heirloom, my friend, good stuff. Macro Mind, back in business. Igor, thank you very much. Happy New Year, everyone. All right. Um, let's do big picture. Equities are getting smashed. Smashed. I remember when $500 dip was like the world is ending. I don't remember what year that was, but I think it was probably in the early 2000s. I mean, could you can imagine? This is just a massive number. The inflated value of the Dow Jones and Nasdaq and the S&P are just enormous. Just this kind of dip is only one and change percent of the market, but it's clearly overwhelms headlines. It's a massive shift, especially with the amount of printing, fiscal stimulus, asset buying that the Fed's doing. The size of their balance sheet is just epically exploded. We all know that. How many trillions is going on? It's crazy. So they can't buy everything. Maybe something's catching up. Maybe something is changing. And that's the whole point. That's what I like to think about. I like to think of trends, and I participate in a trend overwhelmingly till the trend changes. Mostly long term, but there were some short term trends during the DeFi summer of 2020 that, you know, we've talked about it, and that they were short-term trends. But the longer-term trend is obviously Bitcoin, gold, so on and so forth. But the short-term trends, we saw them changing. And I remember telling everyone September 1st, it was an obvious trend shift. Now, that is what catches my eye. What catches my eye is the significant trend shifts. And right now, the trend is shifting in our favor, where we allocate value. Trend is shifting against equities and definitely along the lines of, oh, wow, is that gold? Is is gold Bitcoin? Incredible. What is that? Was it a 80 point, 70 point, $70 rally in a couple of days in gold? We don't see things like this. Crypto Chicks in the house, always a pleasure. Happy New Year. Interesting. How about the massive loss going shorts with Bitcoin? Yeah, was it hundreds and hundreds of millions of dollars? Bitcoin got creamed. Look at this chart on gold. This just tells the whole story because gold is the historic risk-off asset. So when shit starts to hit the fan and crazy starts going on, that asset value allocators turn to gold, and this is incredible. Absolutely incredible to see that. And then, Peter Schiff mentioned that U.S. dollar versus yuan is getting hammered. You don't see dips like this. This doesn't occur in Forex. That's crazy. So clearly a massive depreciation of the dollar versus the yuan. That's It's the same thing as like the DXY dropping, but this is obviously against a specific asset, the specific fiat. This is significant, and that's clearly what's sending the indices, the equities indices, very much down. Gold through the roof, and it's overwhelmingly consistent with what we've been discussing about Bitcoin. As the shit hits the fiat fan, it's going to go towards gold, silver, precious metals, the crypto space. I mean, this is just incredible. If you look at Bitcoin on the 4 hour, this is completely oversold territory in the Stoke, and we completely rebounded. This is a massive wick to the downside, down to 27,000 and change, but it's already hovering at around 31,000. Let's zoom in for the fun of it. I'll show you guys what this dip looked like. I mean, this is no joke. You don't see things like this. And the equities boys and the traditional asset investors point to it as like, what the heck? But we've seen this before, boys and girls. We've been in this game a long time, many years. We've seen the volatility of assets. And what's fascinating is such a macro crypto asset, the largest, the gorilla in the room, behaving with such incredible volatility. But what we also see is the chart patterns. So what I overwhelmingly see, if we zoom out and readjust, is I see an ascending channel. Um, it failed. You don't want it to necessarily break to the upside. It failed to the downside, so it's clearly in a channel. If it breaks out, then the story changes in a bullish direction. But it's just incredible what it looks like at the 4 hour. Let's zoom, zoom, zoom. I mean, look at this. Oversold on the Stoke, and we've already rebounded over halfway through the channel. Wow. Just wow. Let's look at gold once again. Oh my God. You don't see things like this. So what else is happening? So the equity space is clearly on fire in the bad direction. But guess what? Gold miners, silver miners, gold streamers, silver streamers, battery metals plays. Wow, I've waited years to see some life in the batteries metals assets. I mean, some of my assets are up a couple 100%. Just shows you the volatility and amount of liquidity flowing in the equity space, different types of equities. I mean, I've, I've just lost for words seeing these battery metals that I've spent years watching them go down 30, 40, 50, 60, 70, 80%. And now they're just up a couple 100%. They just flipped around in a matter of a couple weeks, recaptured years worth of losses. It's a sigh of relief. There comes a point where, I feel like Michael Berry in The Big Short, where he's down like 60% on $1 billion, and it's like, is my story wrong? Is it wrong? And, you either prove right or wrong in the end. And I was investing in Tesla and the battery metals that Tesla needed in order to expand its business back in 2016 and 2017. And man, there's little difference between being early and wrong. And man, I was years early, and that was painful. That was pain. 2018 was painful if you were trying to acquire stock in companies mining lithium, graphite, cobalt, and nickel. It was painful, but the resurgence in 2020, the end of 2020, and clearly what 2021 is starting off to be, yeah, yeah, I was early. You goddamn right, I was right, boys and girls. Woo! Not pulling a crypto. It's not pulling however many hundreds of percent the crypto space is going up, but it's about goddamn time. Woo! It's exciting. Um, yeah. All right, so let's go over a couple things. Bitcoin is clearly dipping and ripping. Um it's ranging. Let's go over to the 15 min and the 30 min. So as you can see here, it's finding 15 min resistance. It's a little bearish to see it obviously hold the 15 min 200 EMA as resistance. And what is a little disconcerting is the downward slope to it. What is a little reassuring is the bottoming of the Stoke. So let's look to the 30. Oh, that's unfortunate. That's what I was looking for when I wanted to show you the 15. We were ranging between the 15 min 200 EMA and the 30 min 200 EMA for a fair amount of time this morning. A little disappointing to see it below the 30 min 200 EMA. And that's what accounts predominantly for the 15-min 200 EMA sloping obviously to the downside, visibly to the downside. Not significantly, but it's there. But the Stoke is oversold. The Stoke is oversold on the 15. The Stoke is completely oversold on the 4 hour as well. So we got some mixed signals going on, and which is very nice actually considering an ascending channel. So we could see some big dips to the downside. Not surprised to see upper 20s, 28, 29 again. We could see that. And obviously we have resistance up here. Resistance, this is an aberration, as I've used that word several times in discussing charts. Clearly, it didn't hold the support. It fell back down. It's an aberration to the upside. So obviously, significant aberration, the $2,000 give or take. But clearly, you have some wicks and a trend formation, a ceiling, a resistance in many regards, and proven here for a third touch point, albeit an aberration. But support as well, and this pretty much held the support. Where is that trend? Was it the 1 hour? Uh, 4 hour. It's the 1 hour 200 EMA. That's what I was looking at earlier. Look at that wick to the downside. And look, it's the second candle, obviously, and this thing significantly wicked to the downside below the 1 hour 200 EMA. But the second wick to the downside clearly held the support on the hourly. And that's what you like to see. So it looks like we're nicely in the channel. We have nice support on the 1 hour 200 EMA, which is above the ascending channel support. We have resistance up above and the 30-min. Hopefully this doesn't hold as resistance, albeit the Stoke is relatively high. RSI is a little towards the low end of the spectrum, but it looks like it's declining. We could see some further downside. We could retrace back down to the 1 hour 200 EMA, which would not be overwhelmingly bearish. So we had our first candle after the big wick to the downside bounced off the 1 hour 200 EMA, but it's the first candle. And another retest would be interesting. So that would probably be around 30,000, upper 2900s. And then a bounce to the upside, a double retest of the 200 EMA and a couple of candles on the 1 hour. That'd be really nice. And even if it bounces off a resistance and, you see something like this a little bit, not a big deal. Not a big deal. Let's see what the 30-minute. Let's see what 200 EMAs are above. If there's anything, I don't think there's anything above that resistance. Yeah, the 5-min peaked up there a little bit. So there's not much. There's resistance to break out of this green resistance of the ascending channel. Absolutely fascinating. Fascinating chart. Basically, I mean, look at this ranging. This thing's going up and down 50, $100. I guess there'll be a point where Bitcoin's ripping and dipping 500 bucks, $1,000, especially I guess towards the six figures, 100,000. Is that not inevitable? Is not inevitable, boys and girls? Let's look at equities real quick. Oh my goodness. I feel bad. It's horrible. With great, we're benefiting from a tragedy, and it is what it is. We discuss what we discuss because we understand what's going on and we position ourselves in front of the system. So that's not, don't beat yourself up too much because it's significant that you've identified what's going on and you're taking action, decisive action to your benefit, understanding how the system works and placing yourself in front of the system. Ooh, and man, have we placed ourselves. One more time, let's flip through it. Gold is ripping. Bitcoin is dipping, but what a rebound. Equities pummeled. And where's China? Oh, goodness gracious, that's a rebound. Let's see where it finds support. It found support. Let's see where it finds resistance, and let's see if it prints a lower low. Hell of a dip to the upside. Maybe that was a systemic event of some kind. Who knows what the hell goes on behind the scenes with these damn countries? They're so big. Heirloom, my man. What am I missing in the stream? Anything? Yeah, it is a little quiet. It is a little quiet, but it's good to be back in the stream. It's good to talk with all of you. So what's on my mind a little bit is Ethereum 2.0, specifically given that we can't really do much on Ethereum 1.0 unless you're running around with $100,000 transactions, and a $100 transaction fee is no big deal. even for myself, I'm discouraged from interacting with the Ethereum L1 uh, Ethereum chain because of transaction fees. It's too expensive, and I don't want to spend the money. You know why I don't want to spend the money? I'll show you guys. This is it calculates your Ethereum fees. I don't want to spend any more money on Ethereum fees, guys. Oh, no, no, no. Big Daddy's calming down. This was a heck of a DeFi summer. Uh. I'm I'm turning off. Not allowed to trade anymore. My wife saw this and was like, "What the?" And so that was an interesting conversation when she saw that number. So Lido Finance, uh, obviously a DeFi with uh, a Web3 type of user interface, and there's a Yearn component that so Banteg and Andre did some contracts, and they slapped a nice user interface on it, built by these two guys. And this was recently tweeted. So this gives you Ethereum exposure to the staking component. So I'm just looking into it. I haven't applied any value to it. So I park my Ethereum in Celsius. But I want to know more about this because they're preparing this as a DeFi Lego, so you benefit from the Ethereum staking component, and you're able to plug that into Aave and Uniswap to provide liquidity, and you're able to just add the Ethereum staking returns to whatever other DeFi fancy plug and play Legos that you could possibly do. So this is going to be a big deal. Clearly, Andre and Banteg, it's caught their eye with their contracts, and it has the plugin or at least the interest of Yearn, and that's meaningful. So this is something to keep an eye on. With all smart contract platforms, there's always risk, so you always have to consider how much risk you're taking doing something. And this is something that I am not comfortable necessarily with applying any value to at the moment, but it's caught my eye. I want to not only keep an eye on it, but see what's going on. Consider things. Um, Very interesting. See? The idea that it could use STF across Aave and make a compound is meaningful. So now you have staking Ethereum that's earning yield, and you're able to leverage for an additional debt position or provide to a liquidity pool and generate an additional revenue stream. Everything's just compounding. What's going on in the DeFi space, man, is crazy. And you know how you know it's crazy? Because people are paying these ridiculous fees. That's the deal, boys and girls. It's crazy. People are paying these fees because they're making money. And they can throw around 100, 200, $300 transactions because they're making a lot more than that. That's just the bottom line. Heirloom says, jumping in front of them opportunities. Plural, baby. It's damn right it's plural. Crypto check. Yeah, that's just crazy. I know. I do too. I wonder if Celsius Network will offer additional yield. Heard they'll be mining, just not sure if they are mining Ethereum. We'll see how the market plays out. What I know is Celsius is big deal. I think that they're a unicorn already. They have billions of dollars in custody, and I like the story of Bashinsky. I like the way he talks. He's personable. He reminds me of a father figure, and he just has that comfortable tone to him, and it comes off as earnest and just angry, angry at the system, and and that's what we are. So these are interesting thoughts from a risk analysis perspective to how much you could consider applying to Celsius and what he's doing. Is it honorable? And 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 this is the thoughts that you need to have in your mind. You can never trust everyone. You can never 100% trust anyone. But you need, so as I've said with risk analysis, you have to sleep comfortably at night. So you really can't apply all value to anything. There's risk in everything. But what you look for is signs and signals and confluence indications and data to help you understand true risk. And you're able to feel more comfortable. And your risk profile adjusts, not necessarily because the data changes, but because the other pieces of information that contribute to confluence suggesting you can decrease or the risk profile has decreased. That's cool. It's meaningful. You have to tell yourselves a story, boys and girls, and then and if you're having fear, uncertainty, and doubt, That you it likely means maybe that you're over positioned, over leveraged, taking on too much risk. What you really need to do is take a step back and evolve the story, expand on the story. Um, uh, Gene Mark says, who is selling crypto here? I don't know who's selling. I don't know who in their right mind would be selling right now with what's going on in the global system, with the risk of the elections, or the election's over, but with the risk of the potential political volatility that's coming January 6th and the inauguration on the 20th. There's some crazy stuff going on both sides. It's just political volatility has reached a bubbling, a boiling point. Crazy. Nexo is cool. I don't have any value there, particularly just because of their jurisdiction. Celsius and BlockFi catch my eye more. Um, uh, yeah, I'll talk with Celsius. I'll talk about Celsius, my man. Hodl man, that's right. I'm happy to talk about Celsius. It's a good deal. Good deal. My interest is there. I think here's the deal with Celsius. If everything keeps going the way it's going, you guys see what's playing out. This is going to straight up be a banking alternative, and it is banking. It is banking. All you need is debit cards and credit cards, and now you have custody and yield. This is banking. So, but it's new banking. Yeah. The next couple of years are going to be downright fascinating. Um, Crypto chick, no 6 kids. Who has six? Mashinsky has 6 kids. Yes. Yeah, right? I think that as well. That's the tone that I get from him. He's impressive and reassuring and comforting. And, a lot of adjectives come to mind. Simeon says, hello, I just joined and I have one simple question. Is the bull run over? No, not even remotely close. This is just starting. But we go further into the macro narrative on this stream as compared to just crypto. I mean, look at this. Gold is ripping to the upside. This is crazy. Wow. You don't see you don't see rips like this. Look at this leg on the 30 min. You don't see this. And this dip in Forex doesn't happen. And you combine that with the political volatility that's coming, and you combine that with stocks dipping like this. If it loads, 504. Something's up. There's some volatility in the air. And probably that's what triggered this dip to the downside. I mean, clearly it was in blow off top mode. I mean, this thing was overheating. It was like an engine redlining at 9,000 RPMs. But this is a massive multi-thousand point dip. And basically, any volatile event makes sense to have triggered a sell off like this in an incredibly volatile asset. What's fascinating is this stabilizing price, 31,300 already. Wow. Wow. Wow, wow, wow. Wow, wow, wee wah. Yeah, I did it. Also, risk is there's massive risk. Listen, that's the most important thing, as Hodel says. You are taking the maximum risk if you do nothing. You, as oh my God, Robert Kiyosaki says, you will lose. You will lose the game. You are guaranteed 100% to lose, never achieve financial freedom if you hold dollars and only dollars. If you're living in a dollar system where you get a paycheck, you put it in a bank account, and you think you're going to save and break free and be free, I'm sorry. Robert Kiyosaki says it cold, hard, and true. That is a guaranteed way to be a loser, to lose. You are guaranteed to lose. I say that. I don't mean loser in the derogatory sense of the word, but a loser is a person that loses. That's all I mean by the word, and is a guaranteed 100% you will not succeed financially. Bottom line. That's just cold hard truth, boys and girls. So yeah, and that's exactly what Mashinsky talks about and how, his services are applicable to the rest of the world that have no idea what the fuck's going on in crypto, but they want to actually not be a loser and generate yield and actually save value in the face of whatever the hell is going on with regard to money printing and inflationary pressures. Uh, the deflationary implosion aside and that complexity with the inflation narrative. Yeah, Captain Weber, Rook is booming. Let's take a look real quick. You guys know I keep that tab up. Woo! You guys know what's coming on February 1st. It's the Rook emissions completion. $132 for Rook. I'm just saying, yeah. And Heirloom says Celsius is looking to net the main retail market. Very exciting. And the Cell card and with BlockFi and their credit card and Bitcoin uh, returns, just everything is just, it's kind of like the stars aligning. It's incredible when you really zoom out. Think of using a telescope and you're zooming out, you're trying to get a big picture. It's like everything is aligning, and that's what we talk about on the stream, is placing yourself in front of that incredible alignment. And it's just so simple. It really is. It's crypto, just Bitcoin, vast majority Bitcoin. Ethereum could potentially and probably likely will outperform Bitcoin. Therefore, you guys know what we talk about. The risk on assets, the assets that can likely and will likely outperform, are not the majority of your portfolio because they're going to outperform. So you need a smaller percentage of your portfolio applied to Ethereum, and it will outperform. So this is how you build a portfolio. And the altcoins are gonna rip also. Look at this Rook. This is incredible. This was running at 70, $80 the other day. I don't have the chart up, but I did do a unit. Maybe I could do it real quick. Let's see if I can do this real quick for you guys. You need 1 divided by. You need the inverse. Oh, come on. 1 divided by. There you go. Maybe. There you go. So there is a triangular compression, it looks like. You only get the daily, but let's take a look real quick. I know I'm taking a moment. No, maybe it's not. There is an uptrend to it, though. It is higher lows. It reminds me of maybe a little bit of Ren for a while, which broke to the downside ultimately. So this does have a descending triangle feel to it, but there is an upside. And clearly, this is a very low liquidity asset. Bear in mind, the Stoke has clearly bottomed. RSI is pointing up, and what's really prevailing with this asset is the macro narrative what's playing out on February 1st. The big picture, the story, the narrative of Rook is just the liquidity mining emissions are going to cease. DAO governance is going to be evolved. New features are releasing. And most important is the fact that this thing is an absolute money printer. Let's load this. This is the reserves and how much money they're making. And if you go out to the monthly, this thing is printing money. And this is basic arbitrage of the Ethereum network, front running and doing all this fancy shit, looking at the Ethereum mempool as transactions are being executed and just identifying opportunities and capitalizing on them. This thing's a money printer. And if this thing's expanded and scaled, oh my God. Oh my God. All right. Let's check the stream. Check the stream. Um, Celsius is applying to offer debit cards. Woo, yeah. The 1% loans are crazy. They're just incredibly overcapitalized. So basically, anyone that wants money, you'll be able to get it because they're lending so much to, again, generating so much yield from their larger partners that they just have extra cash flow. And they're obviously rehypothecating. So people that are borrowing, they're able to lend those assets. And that's what they're doing. So there's risk involved, but over-collateralized debt positions substantially decreases risk significantly. And that's the whole point. That's the whole point. When you borrow, if you notice, when you're taking that 1% loan, you're putting up a fair amount of collateral. White Wolf says, are you looking at the crypto insurance products? Not at this point. I'm not speculating insurance products. Crypto check hodl, woohoo! That's right, that's right. Yeah, I'm gonna talk. Just got to find the time. Time's not easy. Heirloom says this is the result of 3 to 5 years work behind the scenes. You damn right. Basically everything that we look at is years in the making, even Bitcoin. So it's the truth. This is everything. Not everyone that listens to me, but I've been in this space since 2014, and this is years in the making, boys and girls. This is not happening just now because of what's going on in the global financial system. This is years in the making. What do you reckon happening with XLM overtaking XRP? Okay, no. Um, I think XRP could potentially experience some of the most massive upside potential you could think of for a crypto asset. XRP is completely dependent on the outcome of the SEC lawsuit. If it turns out in their favor, it is going to explode to the upside. So, what does that mean? That doesn't mean you put 80% of your portfolio into it. That means there's just potential asymmetric returns, which means risk adjusted, you apply a little bit of portfolio, 1% bets, boys and girls, and you turn that 1% into 10% of your portfolio, and that's how you change your life. Because if you have 10 things that go from 1% to 10%, that's how you double a portfolio. And that's how you make a big difference. And you don't have to take the risk. You're not gambling. Stop gambling. Stop putting 10%, 20%, 50% into things. DigiByte, 1%. XRP, I don't own any XRP, but that's besides the point. If you're into it and that fits your narrative, your story, that tickles your fancy, by all means, it's gambling. But if you're going to gamble, if you're going to speculate, a little bit of synonymous with gambling. You don't need large positions because the asymmetric return potential is absolutely astronomical. Boom! um, like years of training for the opportunity to come in the Olympics. That's right, Heirloom. Well said. We've had a lot of failures. I've had a lot of failures, and I am here today because of my failures. And I've done well because of my failures, and that's what I hope to teach my kids. Luke says, what do you think happens when XLM overtakes XRP? No idea. I don't follow XLM nor XRP. Crypto Chick, yes indeedy. Frank says XLM being used by Ukrainian government. Lovely. That means it has massive asymmetric return potential. Throw a 0.5% of your portfolio into it. 0.5% of your portfolio turns into 5%. You just won, and you won big. So that's it. It's a risk on, and you guys know the risk on assets I like. Everyone's going to have different risk on assets, but don't take on excessive risk because that's what we talk about in the stream is risk analysis, position sizing, making rational decisions, not taking on excessive risk and not gambling. You don't apply 20% of your portfolio to an altcoin asset. Bitcoin, it fits into the macro narrative of the global financial system. Hedge funds, family offices, money managers. This is corporate treasuries, probably governments at some point. That's not altcoins. They're not going to store value in these assets. So what you're doing, even if the Ukraine is using XLM or whatever the hell is going on, or SWIFT XRP, it becomes a main competitor in a global payments network to SWIFT, it doesn't matter. You're still speculating on the price of the asset. Bitcoin is different. It's different. Nothing fills the position that Bitcoin has carved out for itself. And that's the story, and that's the risk assessment you need to make when applying value to anything other than Bitcoin. Ethereum doesn't have the story of Bitcoin. Ethereum could potentially take over the global financial system. It disrupts everything. But it's still a speculative bet because you have massive amounts of competition. You have the legacy financial system it's competing against. So it's still highly speculative. Bitcoin has been de-risked significantly. If you want to and Bitcoin is risky compared to gold. So risk adjusted rewards, think of risk, take less risk, and you will do better. Your portfolio will do better. Yeah, I'd love to chat. Yeah, my man, Hodel. More than happy. Ping me on Twitter. Let's restart that chat. We'll figure out some time. My pleasure. Crypto Chick. Grayscale recently scooped up millions of XRP. Clear. So what are they doing? They're speculating. They're taking risk. And clearly, based on damn well they got quants and doing real deal mathematical computation and assessment of their chosen courses of action and choices. So clearly, the amount of risk they're taking, their mathematical analysis has deemed to be acceptable. That's the point. Um, Grayscale, buying XRP does not mean you put 50% of your portfolio into XRP, ladies and gentlemen. You buy 1%. You're tiny. You're a small fish. You're a small fish in a big pond, in a big ocean. Protect your gains, stop taking risk, and I promise you, you will do better. And you will be able to sleep at night. You'll minimize your downside, maximize your upside, and you're taking less risk, so you have less to lose. Bitcoin is a digital reserve fund. It's proven itself. It's empirical at this point. You don't have corporations. Once one corporation does it, and there are lots of doing it, and it's just it triggers. You think of the network effect. It triggers other people to think about it. It triggers the psychology for attention to be paid, and that means people in boardrooms are talking about it. And you could think about what happened in 2017, and that was not this narrative. That was retail speculation. And this narrative, the FOMO, the spread of the story, is not just going to be across retail traders. It's going to be across family offices where they're managing hundreds of billions of dollars, and corporations, international and domestic, and nation state sovereign countries. That's what's going to ripple this time. Not ripple, but ripple. You know what I'm saying. All right, ladies and gentlemen, let's wrap it up. Let's keep our eye on what's going on with the overall story. I got my eye on Rook. I think it's a wonderful speculative position. Don't over position size. The US dollar got creamed this morning. It's been rebounding significantly. We're going to want to see where the top is, because if this thing rips to the downside, we're going to see some fireworks in the crypto space, as well as gold, and basically a lot other than corporate equities. If it rips to the upside, what the hell kind of event was it today? We don't see things like this. This does not happen. Ethereum is absolutely incredible. Look at that trend formation, a spectacle in the making. Bitcoin with its massive dip to the downside, what a rebound. And we're going to look to see whether it holds above midterm 200 EMAs or finds these short-term 200 EMAs to remain as resistance. You got to keep our eye on it. I'll be on Twitter. Thank you everyone for joining. 12:06 Monday, January 4th. Smack those thumbs up buttons. Tell everyone to subscribe, and bam, we're back in business. I will see you all tomorrow. Y'all have a good one now. Peace.